Welcome to the instructions for the third quarter of the simulation in sustainable global entrepreneurship. This week we're going to see what's new, and we're going to focus on how you can improve the implementation of your strategy, or maybe that you need to adjust your strategy as a whole. To start with, I have a bit of a complex overview for you, but it shows that your strategy is influenced by the environmental analysis, so the assessment of your business conditions, so what's the market doing, how is manufacturing conditions, and your financial conditions. And please understand that the market demand changes, so please recheck if your product is still what the customer wants, and also check your feedback on your business performance. So how do we do in the market? Is it as planned? Are others outperforming us? How does it work? So check all these things. Do they like our ads? Or do they like ads of others better? What's our brand judgment? Also your manufacturing performance. How are we doing in that part? That also ties into the HR performance. Is staff happy? Are workers happy? Can we maybe see positive effects of our investments in the HR performance, and are we going to continue it, or are we going to change it? And also have a look at your financial performance. Are we heading towards the blue triangle, which I discussed previous time? So it all ties into each other. So have a good chat to see what goes well and what definitely needs to improve. So you have focus points. The third quarter, this is where we make major adjustments before we go big. So check your financial performance. Your gross profit should be a steep increase every time. You might still have some big expenses, but overall we're trying to head towards the right direction. Yes, we still have major investments, so that will influence the whole thing, but we should be on our way towards building a situation where we can actually start conquering the world. So please check your customer reactions to the brands, to the pricing, to the advertising. So are they happy? That's one. If not, we have a problem. But also, are there other brands that they're more happy with? So also check competition. Look at your operations, make an assessment on the growth levels and what you need to do with your capacity. All in all, this is a quarter where you should start analyzing the entire situation before you move forward. So if needed, adjust your strategy, adjust brands, designs, maybe go to another segment where no one is if you're not leading in your segment. Check your advertising, look at your sales management. So how much salespeople do I have? Do I need more? Look at compensation, the entire thing, and all the decisions you feed back into the simulation. You want to, the learning part and the experimental part is a bit over, and now it becomes bigger, more serious. You need to start having things pretty much right. Also, you probably see measures of customer satisfaction. So the maximum score you can score is 100. However, you do not have all the innovations yet. The R&D becomes available in quarter 5 and onwards. So you need to be 70 or higher with your brands. So make sure that you are with the highest rating in your segment and in your market. And if you're below 70, there are definitely things to improve. So these are also indicators where you should change. If others are better, look what they have done. So the goal of this monitoring of customer satisfaction is, of course, you want to give the customer what they want, because then you also have an optimum price, you will sell more, and you want to be better than competition. Because if you are fairly good, but competition is better, the customer will choose your competition over you. Of course, you will still have some sales, but not the maximum potential you want. Remember, previous weeks we always have discuss response functions in different areas. So there are different response functions, and every element has a different one. So figure these out. So sometimes more leads to more. Sometimes more leads to more in the beginning, but later on there's no point in investing more. It could even be worse, that if you invest more you get less, or you're looking for an optimum, or it doesn't matter at all. For each response function, figure out by trial and error, and especially your experience in the first quarters, how does it work? Where do we immediately get returns from investment, and where doesn't it work? So you have customer feedback. You know if they like your ads, yes or no. Do you know if you like your product, yes or no? So skillfully make adjustments, revise brands, maybe designs, create new ones. You can also keep the old one and make a new one on top of it. So you have the basic and the premium. You want to revise your copies of the ads. Maybe adjust prices if you have an unadjusted product which is out there. After a quarter, the market knows it, so you might want to lower prices a small percentage. You can also work with discounts, but a high price with a high discount is not something the customer appreciates. So lowering the real price has sometimes more influence. Also figure out how that works. So, but one thing I can tell you, major discounts are not appreciated by customers. Also, to catch up with sales, maybe your sales force is not that effective. You just hire more salespeople to reach the same goal. You can also decide to deploy them differently or train them differently. So add or take away elements to find these sweet spots to have the right customer response. You can still try a bit. You can also try different things in different markets, because you have different geographical areas where you can offer different products. Hopefully you have insight into the competitors, so you have good overview what they are doing. You know their brands, you can know their ad designs, you know their prices and sales priorities. So with your sales strategy, if you're market leader, probably the others will copy you. So if you do nothing, they will catch up with you. The same is if someone is better and you copy them, they of course also make changes. So do not blindly copy the best one in the market. Copy and improve to catch up. There's also an option that you're not doing that well. You can also look for niches in the market where no other competitors are, and be successful in those. So if you have very strong competitors in, let's say, the recreation segment, and there's hardly any one in the speed segment, you want to go to the speed segment. You move away from them. You can also, if you're not that great, focus on having a bit lower prices, etc., etc. Figure it out. Maybe some more ads to get, so you can compensate, but some things have costs involved, others not. But know what your competitors are doing and use that information to actually get ahead of the pack. So reverse engineer the strategy of each competitor. That's not copy. Reverse engineer. See what choices they made and try to figure out their reasoning, because if you figure out their reasoning, you can actually improve it. Also see who's a threat and who's not. Focus on your own competition. Not everyone in the market might be your competition. Use this all to form decisions, and you can also predict moves of the competition and adjust to that. If you're the market leader and you're quite dominant, you do your own thing. But if you're not that, and that's probably most of the teams, predict where the market leader is going and take an alternative route to catch up or be successful. You don't have to be market leader to be successful as an organization. Also check the human research performance, so the employee compensation for the sales workers, the factory workers, the entire package. Look at the morale and the amounts of overtime. They're not so keen on overtime. So the goals of this compensation management is that you want to deduce which elements of the package seem to drive employee satisfaction and go full on that. You want happy workers. Those investments, of course, they are cost, but they're rather limited in the benefits you will see. So try to find the optimum mix and try to have happy workers, as the quality of your product will go up and the output of each worker will also go up. So it's a very effective way of managing your organization. Because if workers are not happy, they will leave. And of course, everyone is happy with the job, but this work, to be honest, it's quite boring. So make sure that they feel appreciated. If you haven't done an employee survey, still do it. You want to do it. These are small amounts you invest. However, out of the outcome, there will be new decisions which might be more expensive, but you don't have to choose them all. You can also do certain choices. But if you don't know how they feel, how can you adjust to make sure that they become happy? Also look at your firm profitability, so you can find this brand profitability overview so you know which brands are best to sell. You want to focus on the most profitable ones. So try to deduct why these are most profitable and then see if you can actually use those lessons learned for your other brands. We see a lot of brands here. You don't have to have that many brands, of course. You can also have a few which are quite successful, but use these analyses and figure out why these are more effective. So having a basic brand also is a basic price, and maybe adding one or two elements which are appreciated turns up the price of the products in such a way that it's a better profitability. So discover which brands, market, and business functions are making the greatest and weakest contribution to your single bottom line. So this is not the only thing in success. In sustainability, we think of the triple bottom line: people, planet, and profit. But remember, you can only invest in people and planet if you have profits. Otherwise, you are in a losing game. The people component, at least internally in the organization, you can already influence in the next periods. Also the planet and the external people component comes in, which is really good for your brand reputation and for sales, but you need to have funds to actually make these expenditures. So make sure you focus on what the customer wants. However, you have your management of the production and your employees, but you also have to manage your cash. This is always a thin line. So if you go for a high production, of course, you have lower unit production costs, so big profit market, but there's also a higher risk. If you line up too big and you're not successful, you have a lot of excess capacity, you need to send workers home, that's also additional cost. If you have too low production, on the other hand, this will eat up your cash. Less opportunity on profits, and the risk of stock out. So please do not think too small. You need to think big, but not too big. Manage this. Try to find the optimum balance in your growth path. Probably if you go well, there will be a snowball effect later on. So if you're too big too early, you also have risks in the end. We also know system improvements. You have been in the industry and you figure out that some things are not okay. Customers are not happy. The products are not reliable. Things break. You get warranty costs. You need to fix things. Your staff gets unhappy because the process isn't organized well. So figure out which system improvements you can do. You first need to analyze this. You can buy these reports in your game. They're fairly cheap. However, the improvement plans which come out of it might be quite expensive, but you can do them step by step. So do not forget to at least buy the reports, and then later on you will see which ones you will focus on. But not investing in any system improvements will not lead to a successful organization. You need to analyze most problems, even though you are not maybe aware of problems. Then, once you have done the reports, of course, these improvements are easy to postpone. You have so many choices, and these things take time, and they're also quite expensive. However, if your reliability is low, competition with high reliability will take advantage of you. They will move past you. Your customers will not buy more if you have a weak product. So balance this out. Yeah, you can take a lead here with quality over time. Yeah, we're not into short-term profits now. We're building a reputational company for the long run, although we are just playing the first quarters. You have to think like the game will continue years. Also, and this is really important, you will see the balanced scorecard. That's the measurement of the firm's performance overall. The balanced scorecard, of course, you have your financial performance, your single bottom line, but please consider all. In your assessment, and what we would like you to understand and see is that everything in the balanced scorecard is important. So you need to try to excel, be best in every field. It's called balanced with a reason. So with these overviews, you can actually see how effective you are, and you want to be with everything in the top 3. Sometimes, the numbers or the scores of the teams are fairly the same. So then if you're not top 3, that's okay. But if you have an advantage, try to keep it, but also try to balance. If you're not scoring high on any of these, you will be not an A brand. You might not even become profitable. So see what others are doing. So use this to see where you can learn from whom. And if you're a leader, try to figure out which decisions made you outperform the others and continue with that strategy. So do not get caught up in short-term profits, etc. No, think of the long run. And also make sure that as a team, you focus on all parts which are in the balanced scorecard. So in this quarter, main takeaways are: learn from all the input you have now. You know what your customer wants. You know what your competition is doing. You know how your operations are run and how efficient they are. You see how happy employees are, and you know how you can influence them. You also have a view on the financial information, which tells you if you can invest in all these things or just a few. Try to figure out how to manage it. Do not think too small. Think growth, but also bigger isn't always better. It's about balancing everything out. Adjust your strategy and tactics by using all this management of resources, and line up for the next quarter, which is a big one where you will also be able to get additional funds by selling shares. So buy as many tools of management as possible. But only buy them if you're going to use them. Otherwise, it will be a waste of money. With this information, you should be able to continue playing quarter 3. Take time to set everything right. Next quarter, a lot of new things will be implemented. So you want to understand the basic functions and be ready to learn on new. Thank you for joining, and Good luck with the round of decisions.